not a popularity contest. I'm here to help you make some money. I hear a lot of YouTubers talk about passive income and how much money they make in passive income, and of course the elusive $1,000 a month in passive income. And perhaps the easiest and simplest way to achieve passive income with perhaps the least effort but the most amount of money would be to invest in dividend stocks. Dividends are perhaps the simplest and most straightforward investing thing that exists. If you own stock in a company that provides a dividend, you are an owner of the company, and as an owner of the company, you are entitled to some of the profits of that company. When a company makes so much money or sells so much product a year, those profits that they make, they pay it out to the investors, to the shareholders, as a dividend. And it's cash. It's a realized gain. And there are many, many wonderful and great dividend-paying companies. You have Apple, you have Intel, 3M, AT&T, Cisco, Johnson & Johnson, Kroger. There are tons of dividend-paying companies out there. But usually the dividends they can range from below 1% to perhaps even as high as 7% in the case of Cisco or AT&T. A lot of YouTubers actually recommend to stay away from companies that pay very high dividends. And this is very sound advice. You definitely want to. But there's a classification of companies called business development companies, or BDCs, that by their design and definition are supposed to pay you a really, really high dividend. I'm talking somewhere between 9 and even as high as 14%. And before I go on and you decide to buy a ton of business development companies, just remember, I'm just a YouTuber. I'm not a fiduciary or a financial advisor or a CPA or somebody who has any formal training in personal finance and investing. I'm just a YouTuber. I'm a chemist by formal training, and I read a lot of books and just educate myself on personal finance, investing, and the various ideas that are involved when it comes to making money. And so the purpose of this video is mostly for educational and perhaps some entertainment value as well, but to hopefully give you an idea about something that you can research in the future to help you make some more money, more dividend, elusive $1,000 a month in passive income. Business development companies are similar to REITs in the sense that they are an RIC, or a regulated investment company. And these business development companies were developed back in the 1980s as a way of investing in small and medium-sized companies, specifically private equity. I think one of the best ways to think about a business development company is when we think about buying a company on the stock market, it's a big publicly traded company. It's huge. You have companies like Apple and GM and Kroger, and these are huge companies. But what about the smaller companies? What about small private equity, something that's not publicly traded? Well, how are they going to have access to any kind of funds from individual investors like you and me? Most of the time, they have to look for venture capital from really wealthy individuals who have the ability to put in lots and lots of money into a company. So back in the 1980s, business development companies were created. And by law, they are actually designed to invest over 70% of their assets into small private equity. So if you want to invest in a small private company, but you're not individually wealthy like somebody on Shark Tank, you could invest in those companies indirectly through a publicly traded business development company. So one very important thing about a business development company is that by law, by their design, in order for them to avoid certain corporate taxes, they need to pay out more than 90% of their profits, 90% of their income, to the investor. That's huge. So the money that they make is designed by law to go to you. When you buy stock in a big company that pays a dividend that's say 2 or 3%, it's really the CEO, it's really the board there that determines what percentage of the money, what dividend are we actually going to give the shareholder. But in the case of a business development company, they are designed to maximize the profits to you, the investor. And one thing to note about a business development company is, unlike a value or a growth stock, the principle really stays the same. The principle doesn't actually change. If you look at the history of a lot of business development companies, There are some fluctuations, but more or less they stay pretty level over a long period of time. That doesn't mean that they can't grow, and there is certainly risk that the principal could decrease, the value of the stock could decrease. But on average, I've observed that they tend to have a dividend yield around 9, 10, 11, and in the highest range, 14%. Very risky, but very high yield. And the fact is the dividend yield will actually fluctuate a fair bit. But man, if you could lock in a return between 9 and 11%, that's really good. Now, most investment YouTubers will always recommend that if a company has a very, very high dividend, it's a huge red flag. And I would agree. And I've told you that by design, business development companies are supposed to pay out these very high dividends. Most of their profits go into the dividend. But in order to have such a high dividend, there is also risk. For any increase in some kind of yield, there's also an increase in risk. Business development companies actually invest into companies that are kind of on very shaky financial footing. They invest capital and management in order to get a company, a small or medium-sized company, back on solid financial footing. And depending on where the company is, it can either be a good investment or a bad investment. So there is risk, and that is risk that you should absolutely take into consideration when deciding to invest in a business development company. And if you're someone who's trying to make that elusive $1,000 a month in passive income, incorporating business development companies into your portfolio might be a really good idea. I wouldn't say go all in with business development companies, but imagine that you own a variety of different stocks, and the average yield of these dividend-paying stocks is, say, 3-4%. Well, if you added just a few shares of some high-yield business development companies, you can increase that dividend yield, that average dividend yield, to maybe 5, 6, possibly even 7%. And while those individual percents don't sound like a lot, think about this. If you want to make $1,000 a month in passive income, and you have a dividend yielding stock that's 10%, you only need $120,000 invested, right? 10% of $120,000 is $12,000, and that's $1,000 over each month of the year. But if you had a company that was, say, giving you a 2% dividend yield, well, you now need 5 times that principal, right? You would need $600,000 in order to get that same $1,000 in passive income. It was actually Nolan's channel who actually gave me the idea that, yeah, if you invested in some higher yield dividend paying companies, you could reach that $1,000 passive income per month much easier. I'm telling you this information now about business development companies because business development companies are kind of battered. They haven't really made a full recovery since the initial crash in March and April. Other companies such as Tesla, NEO, ARK, the ETF, is actually like really, really hot stocks right now. And a lot of YouTubers, a lot of people are talking about them. And that's not a bad thing. But these stocks are really, really high. And I'm trying to provide you with an alternative thing to look at. What are some things that are kind of beaten down that provide you with a good yield? That actually may be an opportunity because they are kind of in the red. Now is actually a good time to invest in them. Think a little differently. Be a little bit of a contrarian. You don't have to, get the really sexy Tesla electric vehicle stocks that are just super appealing and everybody's talking about it. You could take just the beaten, battered down, nobody's heard of business development companies that pay you cash. Leave a comment if you have any questions, if you actually want me to look over some business development companies. I am doing a lot more research into them because I do think that they are a good addition to any portfolio, just to have at least a few. If it's anything, it's some level of diversification. It does add some cash to your portfolio. With that said, I hope you enjoyed this, and I'll see you soon.